GetCrack. Wake up, motherfucker.
Numbers are in for January, and this year's housing market looks like it's off to a bit of a rocky start. Diana Olick joins us right now with more. What are you seeing, Diana?
Well, Becky, none of the numbers are good. Pending sales of existing homes based on signed contracts during the month fell to the lowest level on record, and sales of newly built homes, also based on contracts, dropped 10% month to month. There was a fair amount of noise about cold weather, but on the pending sales of existing homes, there was actually a small gain in the Northeast and a drop in the West. So not really a weather thing there. Now, it's mortgage rates, plain and simple. The 30-year fix started this year just over 7%, took one leap higher in mid-January, and then basically did nothing for the next 4 weeks. It started falling sharply in the last 2 weeks and is now down 47 basis points from that January high, but mortgage demand from home buyers is still falling. The home builders saw sales in January below last year's levels. Builder sentiment in February dropped to a 5-month low, with builders saying they're using fewer incentives now because there are just fewer marginal buyers. Affordability is just that rough, which then, of course, leads us to prices. Nationally, they're up 3.3% from a year ago, according to a current report from Parcel Labs. This, even though active inventory is improving, up nearly 28% from a year ago. So really, that's kind of a conundrum, because you would think prices would ease off as supply gains, but people just aren't coming in to buy, Becky.
Yeah, why do they think that is? I thought that was like the panacea we were waiting for. As soon as you built more, it would kind of open the floodgates, but you would see prices come down a little bit, too.
Yeah, well, the builders are building more. The housing starts have been down, but they do have a 9-month supply. But when you combine it with the existing home supply, it's really only a 4.6-month supply, and a 6-month supply, not to get too technical, is considered balanced between buyer and seller. The reason we're seeing supply come up so strongly now is because homes are just sitting on the market so long.
Calling on the CEOs of 6 asset managers, including BlackRock, TIAA, and Vanguard, to review Tesla's valuation. The stock is down 16% just this week alone and 30% this year. Joining us right now, Randi Weingarten, president of the American Federation of Teachers. In making the call to the asset manager, she is raising concerns about the security of her workers' retirement portfolios. I want to welcome Randi to the show. Good morning. You know, there's a lot of Musk watchers, Tesla watchers, who I think are fascinated by this letter that you sent these asset managers. Want to understand why you decided to send it now.
So, Andrew, as you know, because, you know, you've had me on the show from time to time when we've done other letters, like when we were worried that hedge fund managers were, you know, in their corporate boards were trying to destroy teacher pensions when they were trying to get business from teacher pensions. So that, you know, we do this from time to time when we see an alarm bell. And what we saw was that when the JP Morgan analysts said that the stock was divorced from the fundamentals, we started watching it because of the $4 trillion of assets that are in retirement systems. Tens of billions are you know, Tesla stocks. And so we would have expected at that point, you know, at the middle of January or the end of January, for some one of these firms to do a real analysis, and they didn't. And what we're basically saying to them is, do your jobs. I'm not an investment analyst. I can watch the trends. You know, we are an economic union as well as an education union and healthcare union. But we're very concerned. And frankly, what we're concerned about is that because there's so much pressure by the Trump administration to kind of fall in line, we're concerned that people are not doing their jobs because they're worried that, you know, Musk is going to come after them. And, you know, it's not that I'm not worried about that, but I am more worried about the fact that if retirement assets are invested in Tesla and they go down precipitously, then state governments or others are going to have to find the money to pay retirees. I'm worried about that.
A lot of those retirement funds had huge gains in Tesla, and if you're going to be in stocks, there are times stocks go down, Randi. I mean,
yeah, but the issue was not that stocks go up and stocks go down. I mean, you guys, you know this better than I. I'm a school teacher and a lawyer.
It's gone way up. It's enriched a lot of Americans.
But the issue is this. When an analyst says that it is divorced from the fundamentals, that's the problem.
But Randy, here's the conundrum, and I'm gonna put it to you. As long as I can remember, as it relates to Tesla and Tesla stock, analysts, and we can go back in history, have talked about the valuation of Tesla being divorced from reality. In fact, I believe that phrase has been used before. The last year, the year before that. And during that period, during the run-up, there were, by the way, a lot of folks out there who would short the stock, saying that it was actually a mistake to own the stock. And so the only reason I raise this is because I think that some people are going to look at this letter and say that it's politically motivated, given that the union is aligned with the Democrats and obviously Elon Musk is on the other side, as opposed to necessarily being something related to the actual fundamentals of the company. So that's why when I said why now, it's what is so different about the divorce of reality from the fundamentals today than it may have been 2 or 3 or 4 years ago.
So I guess what I'm concerned about, so Andrew, I am used to people calling me names about anything and everything. But I would just say we watched like a hawk what's going on in terms of pension funds and our members' retirement assets. And we were really concerned when we saw what J.P. Morgan said, and then the precipitous decline of the stock. And then when Tesla said, by the way, don't worry about it, we're going to have driverless cars. And that's just not true in terms of America. I have no idea what's going to happen in terms of China. So that's why we're asking the asset managers to do their job.
Randy, I understand why you're doing it, or at least why you say you're doing it. I'm just saying to you that there's going to be a perception out there by default that it's political, because I imagine there have been other companies with which the pension fund has owned those stocks over the years that you haven't sent similar letters to the folks who run these things.
We did a couple of months ago about private equity and about Stewart, but you just didn't cover
an individual
these things.
stock. I don't know. Is there
Stewart? When we were really concerned with the Stewart bankruptcy in terms of healthcare and what the private equity funds have done and what we've seen in terms of that, and that was also something that involved our members' assets and also our members' jobs. We do this from time to time. And I get your point. I know people say this all the time. But the point is, I'm making the opposite point, which is my fear is that because Mr. Musk has so much power, people are being silent instead of doing their jobs. All I'm asking people to do is do their jobs.
So, Randy, what kind of reaction have you gotten from the BlackRocks and TIAAs and others? You, of course, are their client. So I'm hoping when you send them a letter, they call you or send you one back.
I suspect that we will get letters back in the next few days.
How does this work? You can't just call them up on the phone? I would assume that you're actually one of their bigger clients.
Andrew, what we have is we have a pension council, and that represents, we have about 30 trustees on it from across the country, and it represents literally $4 trillion of assets. We are trying to make sure that our members, and frankly, not just our members, but people who get pensions, that those pensions are secure. They're deferred wages. They have a right to actually live in dignity. So I suspect, just like when we do other things, that we will hear from them, but I want them to take a real look at it. I don't want this to, obviously, some people are going to think this is political. This is about securing people's retirement benefits.
You're not an investment advisor. You said that, but just to fill in a couple of things what Andrew was saying. In December 2019, the stock was $20, under $30. Ron Barron is a longtime holder. He's got at least 10 times his money in return. He's as bullish as he's ever been on Tesla. As the stock has gone from 20, went all the way up to 400, and now it has pulled back. But we've had debates almost every month from someone you cite one analyst at J.P. Morgan. We've had debates. We'll have one from J.P. Morgan, another one from Goldman Sachs. One's bullish, one's bearish. So I just, you know.
So, but think about it this way. You're covering this letter because you're thinking that it's important enough to cover it, just like you cover all these other people.
We like water cooler talks. We'll have you on whenever you want to come on, as you said.
Look, you've had me on when we've talked about AI. You've had me on at
All right. I'm gonna read the letter where this thing's coming from. Let me see if I can play the video again. I think StreamYard.
We've talked about AI. You've had me on at different kinds of times.
I just don't think you know whether this is a good price or not. I don't think anyone knows whether this is expensive or cheap, and it could be 800 in 2 years, and your pensions could be rich, or it could go down.
I agree with you. I agree with you. I don't know. I'm not the investment banker. Right. First off, I'd love to be on your show talking about career tech ed, talking about how we help young boys, how we do different kind of multiple pathways. I think that there is, you know, that education gets divorced from the economy too much. But you're making my point. I don't know. We watched it from the outside. Right. We have pension funds that have tens of billions of dollars invested in Tesla, and there's warning signs. So we.
All right. Okay, let me get to this. So this is what it's talking about here. This was the article here that they're alluding to. It's not an article, it's a press release. But I mean, I've already mentioned plenty of times on this show. I told you guys, pensions are a big driver of the stock market. You have the big one, CalPERS, California Retirement Plan, upwards to many trillions. You also have the Canada Ontario Pension Fund, big one as well. So these guys have a big voice. So if you want to see like, oh, well, it's a cigarette company, and they'll just start screaming and yelling, doing a cigarette company. And then later it becomes like a gun company, right? Guns, no. Ammunition company, nope. ESG, nope, right? All that stuff. So no oil companies, no. So when they get these huge pensions, they can say whatever they want. So now they're going after Tesla. So it makes a lot of sense. It is political, basically. Whether or not like Tesla is a good investment or not, I don't know. I made my money on Tesla, right? Is it going to go up in the future? Hell do I know. Maybe she's right. Maybe Tesla is overweighted in a lot of portfolios right now because Tesla is a big chunk of the S&P 500, but Tesla is a big chunk of everyone's portfolio. If you have a 401k and don't do anything, most people who have 401ks barely try to manage it. They just click on whatever, I'm going to retire in year 2050 or whatever, and let them deal with it. And most of them are probably in Tesla, in Nvidia, and a lot of like risky stocks that are quite huge right now. So let's read this one. There's a press release. Major teachers union urges top asset managers to review investments in Tesla. I mean, I never seen this before. And why would they do it in public? Usually this is a private matter. They would just tell people and whoever is managing their 401ks, IRAs, or whatever, and say, hey, bro, you have too much Tesla stock. I don't like it. That's it. This is a private matter, honestly. All right. Today, AFT President Randy Weingarten, interesting name, sent a letter to the CEOs of the biggest money managers in the country, BlackRock, Vanguard, State Street, T. Rowe Price, so Fidelity. I think you guys should recognize these companies because most people who ever worked before and they get a 401k package with a company, or you get an IRA, whatever. I mean, you would probably use these companies as well if you have a privately funded IRA, or if you have a pension fund. Yeah, usually they'll go through some of these entities as well in the back end. Most people that have pensions probably don't see it in the front end. It's managed directly by these unions or pension funds, right? Well, I don't know. I don't know about the union, but maybe the union has a say or some sort. Anyhow, urging that they take immediate action to review investments in Tesla, a company in apparent severe decline. Oh, well, no shit. if you listen to my show, you would know that it hit resistance in the chart and it's just going down to support. So it's pretty interesting that all these bad articles are coming out near the bottom right here. So I've been buying a bunch of Tesla in this past couple days, right? So as it's been going down. So let's see. And at grave risk of further devaluation. Yeah, could be. Tesla stock has plunged 23%. Well, you should have bought Chinese stocks, huh? Anyway, while the NASDAQ is down just 1.3%. Well, that's called high beta. AFT members' deferred wages are invested in pension funds totaling an estimated $4 trillion, which include a material amount of the automaker's shares. In addition to these funds, teachers and nurses, okay, have billions of their own savings in direct contribution pension plans managed by these massive asset managers. Yeah. Well, that's why my parents keep getting paid from this type of plan here. And after my dad dies, then I'll get my mom will continue getting her share, and I'll get the rest of my dad's share, half of his share. So my dad basically gets half of his salary right now when he worked, and then so once he dies, I get a chunk of that, and my mom gets the rest of it. So that's about it. And so I'll keep getting his pension even after he's dead until I die. So of course they're going to be worried, right? Well, I mean, if you're that worried about making a lot of money in the stock market, well, you should have picked up Carvana too, right? The AFT Trustee Council is made up of more than 50 AFT members who serve as trustees on public pension funds. Oh, let's see. Representing 27 public pension funds, including some of the largest in the country. Aha! The California State Teachers Retirement System. Yep, that's a big one. The New York State Teachers Retirement System, the Teachers Retirement System of the City of New York, and the Teachers Retirement System of the State of Illinois. Oh, well, that's probably just Chicago. For a decade, the AFT has supported trustees with tools and resources like the AFT Asset Manager Reports, which evaluate investments in companies with reputational risk. Oh, yeah. Isn't that what I just said? Gun manufacturers, private prisons. Oh, you don't like those? And it provides guides to help trustees assess investments in private equity. Yeah, there you go. So, all right. So let's see. Blah, 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 blah. Let's see in the letter. Tesla's latest financial disclosure should raise alarms. The company reported an operating income of $1.6 billion for the fourth quarter of 2024. And a 23% year-over-year decrease in profits. It made $2.31 billion last quarter, down 71% from the $7.93 billion profit in the same period. Yeah, it's slowing. The Tesla's vehicle profit margin slipped to 13.6% in Q4, missing expectations and underscoring rising cost pressures. These are not isolated incidents, but rather a troubling pattern that suggests Tesla's pricing power is eroding, leaving it vulnerable to market fluctuations and increased competition. Okay, well, buy Chinese stocks then. Given these mounting concerns and the potential material impact on teachers and unions, pensions portfolios, and private savings, Weingarten is asking for a response from asset managers detailing their firm's assessment of Tesla's current valuation and the steps they are taking to protect AFT members who are their clients and beneficiaries. Okay. All right. Okay, that's fun. Very fun. Interesting. So let's look at Tesla right now. Let me see what we got for Tesla. Let's see if you guys been listening. Okay, so this is the Magnificent Seven. So it's been having a bad month. So if you were an Apple, Microsoft, Google, Amazon, Nvidia, Tesla, Meta, any of those, you would have been down. Let's see. So these were the, from here, we're down 14.64%, almost 15%. So very bad month overall for many stocks, including Tesla. Now, does it, if you were an actual trader, you would know that this was about to happen anyway. So overall, if you were invested in these 7 stocks from, let's say I start just before COVID. So let's say COVID brought it down. So I would be down about 30% on that March low, right? And let's say I was dumb and did not do anything. I just kept holding, and I went through the pain of Jerome Powell. So from here, December 2021 into December of 2022, though I'm again just up 21%. Okay. All right. So I used to be up 116%, and I don't know why she wasn't complaining back then up here, but all right. She wants to complain now when we were already up 196% from that February level of 2020 before COVID. And now we're still up 156%. So, um, well, you know, what can I say, right? I think most people like this, yeah, unless you're trading actively in a respectful way, you're just not going to hold on to these gains. And as I've said since December, Jerome Powell, he talked in December here, 16th last year, right? We had this candle. So these are weekly candles, mind you. And we haven't gone anywhere into January, right? And then when February started, everything started rolling over because we had earnings, right? We had a lot of earnings results. Apple, Microsoft, Google, Amazon, Tesla, Meta, and now today, 2 days ago, Nvidia reported, and we just took a bigger dump this week. So overall, the prices of these stocks are probably more expensive than they should have been, right? Based on this reaction. But still, you're outperforming the overall market. So if you were just in the S&P 500 here, you would be up 82% from that February. Okay? So let's see. Yeah, 82%. But if you just did 7 of those stocks, you're up 156%. So I don't see a problem with them overweighting Tesla. Now, if it's an issue in the future, in the next 5 years, that's a different story. But I would think Apple, Microsoft, Google, Amazon, all these stocks here are probably not the places you want to overweight anyway. They've run their course. They pretty much run their course. We're already peaked out, I think. It's going to be very hard for them to give you more gains. You already were up 200% at the start of the year. So that's all I got to say about that. Yeah. Now let's go on to today's market. Okay. So we're done with that. Talk about the Magnificent Seven. Let's go on to today's market. We got Microsoft here. Not Microsoft, MicroStrategy. So I said I like this thing like 2 days ago. I said, I like this thing. I like this thing. This thing was trying to stay around here at 240-ish, like 250. Okay. But yesterday we had a little trouble with the NASDAQ, right? We got a little trouble. And then the Bitcoin started moving back down. Now, if you look at the QQQ here, we hit about 498 to 497. So below this rectangle region I drew here. All right. So this thing has like been the support, I guess, since January 13th. All right. So this is pretty deadly, I think, right now. We've got. So this is a huge red candle for this week. So Tesla did not help, and I guess the tariff stuff was more of a catalyst, because if you look here, this was like during Thursday. So after Tesla reported Wednesday afternoon, it tried to move up, but it couldn't get back up into the 520 area for QQQ. And then it just rolled over for that first hour. And then it just decided, late afternoon, I'm just going to keep crashing. And now we're here at this level of liquidity. That means it's going to have a hard time going to 520 next week. So next week, we're going to have a hard time getting up there. Okay. And I'll have to see. I'll have to see how this goes, because we got a lot of economic reports that probably matter a lot more than I was expecting, because we did this. Now, if you remember, let's see what I did. I think this was one one prognostication I did at the beginning, right, of January. I said it would zigzag, zigzag, and then fall through and then come back to here. So right now for the S&P 500, we're at 5,890. And I was thinking it was going to do this until it fell down into 560s. Okay. The 5,600s. Let's put it that way. So around 560 in the S&P, SPY ETF. And then we might bounce back or something like that, or it'll fight around here. I don't know. It could go a lot lower, right? We'll have to see about that. But if you look at the futures later in the month, it's like by the end of January, I said it might just do this. I said it would peak out. It would try to rally up to 6,400, 6,300, and then do a sharper decline back down to 5,300. So that was one of my predictions. So this one was the one I was aiming for this month. But as you can see, yeah, we're not doing much now. A lot of that DeepSeek, the tariff stuff really took away a lot of the momentum at the beginning of February. Okay, so end of January into early February, we couldn't really get that push up with multiple candles moving up here. So we've been rallying hard. We tried to go into that Max Payne last week, and then we just rolled over, right? We just rolled over. Now we're just rolling over here. Okay, so I'm gonna play this video, and this will be a companion to the last video I played yesterday or 2 days ago. Okay, and then I think we are just going to roll over next week, maybe, because I highly doubt we can get this back to 6,000 now on this kind of movement.
Note in both the example of the S&P 500 and the NASDAQ, the volatility with which the market drops, and then the labored way that the market rallies, and associate the volume on the drops to the volumes on the rallies. So the volume is quite high as the market breaks, and the volume is actually diminishing as it goes further into its rally phase up to the resistance zone. And what does that tell us? And this is really an important part of what Wyckoff is that Wyckoff is so contextual, and that is the context with which the trading range unfolds, a trend unfolds, etc. In this case, we know that distribution has the effect of increasing volatility through the distribution trading range before markdown begins. And this would be the thing that I would be worried about here, Ramon, is that we have this very sudden sharp drops, volume is high, supply is present, and then the rallies that push back up to the resistance level are showing diminished demand. And so I find this to be a picture just in what we can see right here, which is the beginning of the year, December to the present, is to be a little bit of a look at a market that I think looks tired.
Okay, yeah, that's what I think too. Yeah, but we're gonna have to get through the next 2 weeks. Okay, we're gonna get through Max Payne again. I think when Jerome Powell speaks in 3 weeks' time. We got 3 weeks' time. About, let's see, 1, 2, yeah, 3 weeks. Yeah, about 3 weeks. And next week is going to be a lot more important because of all that's been happening now since then, because we are at a major point of support, right? So QQQ is back here, back when we rallied up in January 13th. Now, the other thing, yeah, look at the S&P. You see here, yeah, we fell through this rectangle here, so that's not good. This thing, this puts a big fat wall to get back to like the 599, 600 area. I think that's very challenging. What would I think would happen is that it will try to get close to there. Like it'll have a lot of struggles in 595 and the SPY, and then it will eventually roll over. So my thinking is this: it'll probably do this and then fight, but eventually it'll just roll over here into April. Okay, so I doubt we're going back to 609, 610, 612. I think that's done. I think that's pretty much done. Yeah. But, I'll swing it. So today what I got was some SOXL. Okay, I bought some there. I was talking about like you guys could think about buying it here, right? At 25 ish, maybe 26. But this day on Tuesday before Nvidia opened, and then the next day we went up to 26 to 27. All right, so not bad. So you had a 6% gain here, but after that, as you can see, that first candle here, terrible, terrible. It just gave up everything and just fell over right there. That's it. So a lot of stuff I had to jump in, jump out, jump in, jump out. Really annoying. There's no swinging here. But at this level, at the lower level we see now, yeah, okay. Since NASDAQ hit the 497 here with the QQQ, S&P hit the 584. All right, I'll give it a shot down here again. We'll see if this thing can rally back up here at the minimum. But if you think we're going to go back up to 600, 608, oh man, we got to redo everything again. Everything again. This is real tough because unlike in January 13th, the S&P 500 was a lot lower, right? It was down here at this level of liquidity. It was safer here to go long. Here, yeah, okay, you can try, but you're going to have to get some good economic results. And what we'll have on Monday, we'll have manufacturing at 10 a.m. Eastern. So you have manufacturing, ISM manufacturing numbers there. And then Wednesday, we'll have the service ISM, 10 a.m. And then we'll also have Marvell going to report earnings after the close on Wednesday. So you got that one. Let's see, Marvell. Yeah, okay. Not bad. All right, not bad. Let's see. Okay, let me get this. Yeah, Wednesday. Okay. And then Broadcom, AVGO. So Thursday. All right. And then we'll have the payrolls on Friday morning at before the market opens at 8. So that'll be pretty important. So do I think that's going to happen? I don't know. We'll have to see. But so far, let's look at the earnings. SoundHound. Not bad. So this thing is up. Yeah, it's still fighting at that 18% this morning. Pretty not bad. So it was close to hitting and falling through here. Okay. So we would have got right through here back to $5, but it's holding on. It's trying to hold on. Not bad. I don't know if it's gonna go back up to 18 next week, but it's a possibility. It's definitely a possibility for a trade. But right now I'm in Tesla, right? Tesla. So it hit 230.83 yesterday at the close. Pretty much good. And I said I was starting to buy around here, right? When it hit the 290s, the 290 area. So not bad. All right. Hey, let me check everything right now, and then I'm gonna go through a list of stocks that we're gonna review. We're gonna review some of these earnings reactions. So I gotta review a lot of them. Okay, MSTR is coming back up. All right, not good, not bad. All right, let's see. We have a whole bunch of them that I gotta go through. Okay. So let's see, EIX. the Southern California utility getting beat up because of the wildfires last month or January, mostly January. There wasn't much to talk about by the time of February hit around, but perfect, good. So up 6.62%, not bad. EIX, not bad. I like this one. So I've been scooping it up since it was 40. I mean, it touched 55 here, 56, 55 here, right? And I've been buying more and more as it went lower. Okay, good, good, good. I think this is good. Now, the question is if it's going to get blamed for the wildfires. I don't know. I mean, worst case, it goes down to 46. All right, from here. But I think if the wildfire stuff is real, it can get a lot lower. It's going to have that bankruptcy thing going over it because it's going to get huge lawsuits. Now, if you look at PCG, it didn't have earnings, but because it's in California, even though it's Northern California, like it's getting hit too. But this one's not bad, right? So I've been scooping it up at 15, 16. Now it's at 16.40. I might buy more because it's going to recover everything and go back to 20. So this is pretty much a no-brainer here. And once it does that, then we can continue on. I think the only problem would be in the summer if some wildfires that'll happen. But let's see what happens with this one. Yeah, because Northern California will have its issues with wildfires typically later in the summer this year. Then, if that's not going to happen, let's see what else we got. Lemonade. So LMND. Oh yeah, this one I talked about 2 days ago, right? I said I like the way it did earnings on Wednesday. Look at that. So it had an initial drop to 27, rallied back up to 31, and then the next day, even though the market was dropping, it was trying to continue and go up 20%. Perfect. This is exactly what you want to see. When you see this and then it falls back through gets supported like this. Yeah, so I think some of these software companies are really attractive, are getting very attractive. My only worry now is this is not a great time to buy stocks. I think April, like late March into April will be better. And then we'll try again into May and see what happens. I don't think this is going to try to break 52 right away. Even though it looks like it's set up for that. This is a lot better than, let's say, ASTS. Right now, ASTS kind of like, yeah, it's trying to hold on, but I don't know. Yeah, that because it's a similar looking chart. And Peloton, like Peloton, PTON. See, this one's a failure almost. Like it's right back here at support at 7 something. If it just goes right through, it's over. It's done. It's gonna just collapse right through here. But they have similar looking type of charts where you have this kind of creek action, and then you break out of the creek, right, on some kind of volume here. And this was started at earnings, but then you give it all the way back like this. Yeah, I don't know. Okay, let's see what else we got. Okay, let me see. So opposite of LMND, so lemonade, right? You see this where you have a bad reaction at the open after earnings, and then you recover and take everything back. Now you look at Nvidia this Wednesday, what happened? So it opens a little bit slightly higher, but then you just go all the way down, and even worse, it just completely slices through all this support. Bad. This is bad. So it's very unlikely Nvidia will do good in the next 3 months. Very unlikely here. That's what I think. And it's just going to roll over. This thing is just going to roll over. So maybe it'll fight again at 130, but then roll over. Now, imagine if this thing was at 150 or 140 and it did this. Wow. Yeah, the NASDAQ would have been like slicing through everything really quick. Okay, there's very few stocks holding up the market right now. Those 7 major stocks I talked about already earlier. And then you have the teachers union yelling at Tesla's already been dropping for the whole month. Like this was a distribution in December, and then you're like, wait a minute, what's it doing here? It's just like, and this looks very similar. If you looked at SMCI and compared it to Tesla, like look at SMCI here back in 2024 in March. You see this? Like it moves up, it tries to make a little high, new high here, but then it rolls back over and then makes lower highs. It makes a lower high, and then it just completely collapses here, and then makes more lower highs. And then finally, it's just like, oh, okay, we give up. We just give everything back. If you just took this whole shape and then you compared it with Tesla this past month, so that whole shape for one whole year, right? And then you just look at this it's fractal, right? So if you just look at this was only 3 months worth of trading. And then that whole thing over there was like about like 6 months to 9 months. That's what it is. Like you try to make a new high. You just have this blow off because this is like a little indication that, hey, hold up. There's nobody here willing to buy this thing to go higher. So let's wait and see what happens. And then it just goes, okay, it's making a lower high here. And then when you have earnings, it just it doesn't do anything. It's like struggling to just do this 408 thing. And then the next week, it just, all right, it's rolling over. Bye-bye. And now we're here at this 283 level. And I see all this bad news coming out because it's easy for the news to come after the fact and tell you, hey, Tesla's down 20-something% from the high. And it's looking bad. Well, you should have told us that like right here when it was struggling at resistance to make a new high. So what do you think was going to happen? Like good chance that it's going to roll over. It rolled over. Okay. I thought like here. So when I was starting to talk about Tesla maybe last week, I said, oh, it hit the little support level here at 300s, right? 330. And I said, well, maybe it'll try to hit the 390. Maybe even 400 again before rolling back over, but it just barely even got to 370 here. You see the 18 daily moving average pushing down. That's like acts like a little resistance. And then it just like said, whatever. I just roll over some more. So we got here earlier than I expected. Okay, good. So I think it's worth a buy, but most likely this is just a trade. I wouldn't say like, oh, it's just going to shoot back up to 400. No, it's going to do this. It's going to go up to 330 again, right? 340, fight. And then probably just come back down to 280 again. And if the market is going to have a bad time in April, then maybe you'll get lucky. You'll get it down to 200 and you can buy it at that price before earnings, because earnings is late April. So we'll see earnings again pretty shortly. Time flies. It'll go pretty quick. So for me, I like to do trading between the earnings. I don't try to guess what earnings will do. You see a lot of these moves happen between earnings. Like here in October, you had this push up, and then once we got the elections through, right here, like let's say you waited till elections and then you bought here at 280, you could have got a nice move into 480. That's 70%. Yeah, 483, not bad. So I didn't need to guess what earnings was, so I missed this one. All right, I missed this move, 21%. I missed that one. I missed the elections, 14%. So let's say I didn't do any of those and I just bought here, I would have got that. And then now that we went after the earnings, we've gone all the way down, right? So now I'm preparing to get back into the next earnings season. So I could buy here, see if it can stay at 300s, whatever, but it probably won't. And then let's say it goes down, and let's say if I can get it back at 280 again before earnings, or if it goes down a little bit lower, like 240 here, or 213. So that's how you should think. You should strategize. You look at the price. You go you look at the dates. I know where the earnings dates were. I want to play between the earnings. Right now we're moving down. How low can we go is your strategy right now. Where would I buy if I want to go long? Where would I short if I want to short, right? Again, same thing. So yeah, this would have been a good long, and then once you got up to here, you would have been like short, got down here, and then you would have, that's it. You're playing between the ranges. Now, if you look at SMCI, it's the same thing. We were hitting this area at 25, pretty perfect, okay? And this level was set all the way back in August 2023. We got there, and I said, well, earnings is going to be around the corner soon, in a couple weeks, right? Or 1 week. Maybe it was okay. Yeah, a week and a half. I buy here, I go up, I sold here. I didn't wait until it hit 42. I was just like, whatever. I got a good chunk of the move. I'm out. Now, earnings was around here, right? Tuesday, February 11th. So after the close. After the close, it tried to do this. It was fighting. It was fighting in 42. And then on Thursday, right, I said, I'm going to take a chance and buy here at 39. And I got stopped out the next day at 37 at this point here. But when I saw the candles move up in the first hour on Thursday, I said, oh, shoot, this thing might go a lot higher. I bought back in, and then I sold again on the way up here to the next level higher. So a lot of times you see the earnings, it'll happen during points where it's near a major source of resistance. You see the fighting that was happening here in SMCI? You had 4 days of fighting. Up, down, up, down, up. So that was most of the week. And then you got lucky, and Friday, boom, you get pumped out of this range, and you're like right here again where it was in December. So most likely with the green candle like this, you're going to go up. When you see a red candle like this, when you're above resistance for the day, you're most likely going down. And I'll give you another example. Let's look at Zim. Zim did this. Zim did this. You see this? We had earnings. Initial result was high. We go up to the resistance at 30. We gapped up, and then we fell down for the whole day. When you see that, you're probably going to be like, the next 2 days are going to be bad days. Well, next day is a bad day, down 10 something percent. Next day, we're down 1.86%. But then we keep going down, 6 point whatever, down, down, down. That's it. So pay attention to when it hits resistance. Look at the candle for that day and go like, hey, what's up? And then for like SMCI, you're like, you go above resistance, right? You go above this major resistance at 42 and try to go up to this minor resistance at 50, near 50, and you fail there. So far, we're back here in SMCI. I bought some like when it went down to 39. I tried to get back in yesterday, but it was like, whoa. It just broke down through 45 and I got out again. It's tough trading. You know what I mean? So here it was like, oh, maybe it's good to go. Maybe we'll stay here for the rest of the day. Wrong. Like late afternoon, it started rolling over with the NASDAQ. The NASDAQ just completely collapsed 2 hours before close. And that's it. It's over. Right? So wait for today. We got this move and now we're up. So now we got to wait for next week. A lot of this stuff is we have to wait for next week. So we got Sound, SOUN. Good. We got 18%. Is it going to go up for next week? Let's see. We got LUNR. LUNR I talked about where they have launched like a couple days ago. They launched on the Falcon 9, their satellite, or not satellite, I mean lander, lunar lander. The lunar lander will reach the moon in the South Pole in about, so at that time they said 8 days. So we got about 6 days left. Okay, 6 days. So you got like about 5 trading days, 4 trading days, whatever, and to see if this thing can go all the way back up to. So this could be a great trade for the next several days as a swing. So because people are just going to get more hyped up and be like, okay, is the lander going to land upright or not? You know, and if the economic reports into intervening days, Monday, Wednesday, are good, hey, I could see this thing going back to 20, and then you could sell at 20. You don't need to wait until you find out the news, right? So this is like earnings. It's just like earnings. So you know there's an event coming. There's an event next week. They're going to figure out if that lander landed upright. Even if it lands upright, you probably want to sell because that's the end of it. Nobody's interested in this stock after it's done. Okay? That's about how you play it. Now let's look at some other earnings. Archer, ACHR. I like this. So this EVTOL, Electric Vertical Takeoff and Landing Company. I like this. Looks good. This looks good to me. So this major resistance at 7. Not bad. So ACHR. Ooh, perfect. When you see like, okay, initially it's down, right? It's down like 15% or something. Yeah, 20%. Oh, yeah, it went down 20% and it rolls back up like that. Oh, yeah. This is good. Now, you should see this one compared with like WGS. Right? WGS, we got like on earnings last week. I think this was last week. Yeah. Last week. It went up, it stayed. So it's ignoring the market. Good. I like that. It doesn't care about the market. It's a risky stock, but it's still trying to stay above 84, this level. So it's at 99 right now. Not bad. I'm going to be really interested in what this thing does. For sure. So I think next week's going to be good. Another one is RXRX. Okay. So we had earnings this morning. Not good. So we go down. But hey, at least we're still trying to fight and stay around 8. Now, this whole smile I talked about, it tried to get to 12, but it didn't even bother fighting between the 12 and 15 area. That's not good. So now we rolled back, right? So do we try again? Let's see. It tried to get to 6 something. I don't know yet. If I want to try this again, but I'm definitely keeping it on the list to watch. But this chart now is kind of gave everything back. So we reset. Now hymns. Okay. We touched 36. All right. So you got the earnings. You touched 36. You're trying to fight. This one is probably not going to get back to 70 anytime soon. I would watch it still. Like, see how many times it retests this 37 area again and again. And maybe I'll come back to it in 3 months. NVTS, let's see. So I had earnings, it's down, goes back to $2 something. It fights, it's back to 2. So it's still fighting there. Okay, I'll keep watching it. But the idea that it can get back up to 4 and then break out of 4, nope. Another 3 months. You got to wait another 3 months for this one. So a lot of stocks, you get something that looks good, but it doesn't turn out to do anything after earnings. Then it's reset. Then you got to watch it again for another 3 months. So you always have a group of stocks in your list. All right. You got a chart. So you know where support, where resistance is, and you pay attention. Another one like DNA. Right. Let's see. It looked good. It was trying to do good. But then once it did this 15 and rolled back over, nope, bye-bye. And this was before earnings too. And once we got earnings, we fell again back to 8. Now we're at this level where back 8 and we're below this range of 10 to 16. Now you got to keep watching it. Another 3 months. See if it gets back to 10, fight, and then maybe this will do something by the end of the year. But right now, with this structure, nope, no go. MOS in the same area. We got fertilizer. So this had earnings yesterday, so it looks like it was bad, I guess, but it's back to support at 23.78. It went down a little bit below it, came back up. So okay, I'll keep watching it. MOS, I think NTR stayed a lot better because it had earnings, but look at it, it's definitely not back at its lows and it's still fighting here. So NTR is probably going to be higher priority than MOS or DNA. All right, so there we go. I don't think CTVA reported yet, did it? Oh yeah, it did, but it didn't do anything. See, came down here, and it can't get to 65. So this one's lower priority. I don't know what it's doing here. It could just roll over again. Pretty sure. Okay, that's it. Let's see. Let's look at the ERJ. ERJ. So this is Brazilian airplane company. I don't talk about it too much, but I mentioned it briefly this week because earnings was coming around the corner. I was curious to see what it did. It's still looking good. So if you look at the weekly chart, it's beautiful. It's beautiful since 2022 in the summer. Really nice motion here, going from 8 to 47. And if you went back to the COVID times, it's 4 to 47. Not bad, not bad. You know what? People would think like, oh, it's Brazilian. Like, I don't even want to touch this thing. But hey, compared to Boeing, this chart's beautiful. EMBRAER, Embraer. And we are now back at this high set in 2007 before the great financial crisis. I don't know if it's going to go higher, but the trend suggests it's still good. So I really want to see if this thing can break out here. And hey, I'm willing to put more money into it. All right. Okay, so that's a good one. That's a good one to pay attention to. We got GEO. So this is private prisons. I'm sure the pension companies do not want to pay into this one, but hey, we got earnings. It went below this support level at 25. It stayed above it. We are like trying to hold. So, okay, I'll keep this on the list. I don't know. We're going to have that El Salvador deal and put prisoners in there. Shoot, man. But I'll keep paying attention to it. Joby is just like ACHR, same industry. So the electric vertical takeoff and landing. No, this one, yeah, this is a lot uglier. But it did hold this 7 level, so maybe I'll just keep. I think ACHR is the better play. This is the one my cousin's in because I told her to get in. It was like $3 going up to like 10, and I don't see any weakness yet. Like if there was going to be weakness, it would have been today, right after earnings. But it's holding, so I think ACHR is the better play for that one. Let's see what's next. Okay, covered that. Okay, let's look at some Bitcoin mining stocks that had earnings. MARA. So I was telling you guys that if it failed and it went to 8, I would be a buyer here. It looks like it did. It's trying really hard, even though Bitcoin has been going down. It's been trying really hard to stay close to this $14.50 level. Okay, I'll keep watching it. I mean, I wouldn't buy it though. I do not expect this thing to go to $20 and then 24 anytime soon. I think you're better off waiting, but put this on the list now. Riot, RIOT, another one. This is bad. This is always doing bad things with earnings. So no, I don't think this one. I think you're better off with Wolf. I think Wolf reported yesterday. This is a lot better. Even though like you see this, it's like kind of looks like a breakdown now. I would rather watch this one. So WULF. Yeah, I would rather pay attention to this one. So I'll keep this one on the list in higher priority. Okay, let's look at Nancy Pelosi's Tempest AI. So it reported on Monday. So since it reported on Monday, it still followed the market going back down. It probably is going to roll over into 42. Maybe that's a better place for people to want to buy. Nancy Pelosi's probably long gone. Long gone. By the time you figured out that she was in it, you overpaid. And I think a lot of these people started like rushing into this stock. And it's easy to pump this stock because it's a small cap. So right here, they figured out that she bought it in Friday. And then on Tuesday, when the market reopened after the holiday, it just ran all the way back up here to 87. And it's just like, come on. This is above the resistance of 71 right here. 76, 71, whatever. I just loosely say this is the resistance around 70. You fall right back, and then now you go into earnings and you fall further. No. And the market's not in the shape. So keep paying attention. TEM, probably you can get a better price if you want to play it again. LTBR, this one here, the nuclear stock, this one's more interesting. So I mentioned it last time I talked, and I said, hey, you know what? After earnings, it tried to fight pretty hardly, and it went back down. And today it's fighting to stay here. So this $10.46 area, it looks like it wants to hold. That's a good sign. Uranium's not in a good shape. Okay. As far as the miners, and LTBR is the infrastructure side of it, so it can do a lot better than the mining stocks, but still, this is highly risky because it moves up and down so fast. I mean, I'll pay attention. Like, if you can get it at man, I don't know if it can hold 10 though. So if the market starts going down and this thing just can't hold 10, well, just pay attention at 8 and 6. But the way it's reacting to the earnings though makes me think it wants to go back to 10. So if it comes back down to 6, you might grab some just in case it just returns back to 10 really quickly. So LTBR, yeah, Light Bridge. That one, pay attention to that one. Okay, Rocket Labs had earnings. Ooh, let's see. I don't think this was good. Yeah, it wasn't a good reaction, but it's holding. This is nice. Okay. Let's see. So it was down as much as 18%. Now it's up 2%. Not bad, but the way the shape of this chart, you see this? The way it's constructing its move right now, yeah, it might go back to 25, but then it'll just keep falling back down. So this may take another 3 months to resolve. Now, if you get a good chance to get it at 15, I would put an alert in. I would say if Rocket Labs gets to 15 and lower, start paying real good attention, because maybe you can grab something cheap and then the market recovers and this thing will just roll back up to 20 again really fast, right? So I would just keep this on the list. Okay. Opera. Oh man, this is a dumb stock because I think it's Chinese owned, right? The browser. So this thing just makes a browser. I have no clue how it makes money. I think they have some kind of crypto too, where they pay you in something for watching ads. So if you watch ads, you get paid in crypto. I have no idea. But anyway, this stock is popular because it ran up in 2022. You see this from $4 to about 27. Now it's 18. Yeah. So it's sort of like a meme stock, kind of like Root. Not sure. Yeah, it looks like this thing, it wants to keep fighting here. I'll just put it on the list, but I don't think I'll take this thing seriously. It's like Root, ROOT. You see this? So it had earnings, ROOT, and it's a meme stock. Now, if you think oh, hey, look, it's gonna fight at 140 and break out and keep going up. Yeah, go back up to what? 500? Nah, well. Well, yeah, I mean, if you're a gambler, put it on your list. ROOT, I don't know. It could be, it might want to eventually. Let's see. I covered NVTS. I covered that. Let's look. HIMS, yeah. DNA covered. MOS. Okay, good. Oh, TDOC. TDOC had earnings. I don't think this was good. Oh, this is terrible, man. So you see, the chart looked all enticing. You had a bottom, you come here, you pull back, you go over to a higher high, and then just before earnings, you drop 20%. And then now we have earnings. This week, we're down another 18%. We're back here. This is like RXRX. It's oh, it looks like it's about to go. It's about to go, and then it just fails. Oh, no, sorry. See you in 3 months then. TDOC, TDOC. Okay? So that's like telehealth. HIMS is a lot better. HIMS does the telehealth, and it's got its drug generics business. AI. Let's see, AI. So C3.ai. AI is a ticker symbol. This one failed. Look at that. Look at that. So in December, it was like, oh yeah. We're going to 42, and then we're gonna go higher. No. The rest of that month fails. January fails. Now February. Look at that. We're going back to 20. Okay. Watch what it does in 20. Maybe I'll come back to it in 3 months. Okay. So this is what you should do every quarter. Every quarter, you should go back, look at all the stocks that reported. You look at where they've been. Look at the range. See where it was going to break out. It's a failed breakout. It is a breakout, something like that. And then you put it on a list. And then during the next 3 months, because you know the stock market is going to puke, you look at, oh, hey, okay, I remember AI. If AI drops to $20 and then it overshoots and go lower, like maybe you never know. Maybe it like has a real bad reaction to the market while the market's going down. It goes to 15 or something. And then it starts bouncing back. You just start buying. You just go buy, go back to 20 and then hold and see if it can get back to 30 and 40. And that's a trade, right? That's a good swing trade. Because the next 3 months comes around, people forget, and then you have earnings. Like, let's see where the earnings are. May. See, by May you can get out at 40, and before it reports, to get out, you're done. So, I mean, I'm just saying it could do that. I'm not saying it will do that. BKV, great. So this is an IPO. Now it's rolling over. Okay. Now, if this thing gets back to IPO price, I might buy. So BKV is a new one. That came out. It's a utility company, I guess, in Texas, does natural gas. So it's been pretty popular when it first came out. Now it's not so popular, but hey, it's a natural gas stock. I'm looking at this, $18. Man, okay, I'm watching. If this thing can get to $18, yeah, I'll pay. Let's look at the IONQ. Quantum computing, Martin Shkreli's most hated stock. Let's see if it gets to 20. If it gets to 20, I'll think about it. Okay. This is definitely going to roll over. And maybe 14, 15. So put this on your list for the next 3 months. And one last one. Peloton, I already covered, I think. I already covered Peloton. So yeah, so all the stuff that's scrolling on your screen that I said, earnings, review, look at that. Look at those very carefully. See what happens. So you see this? It kind of like it's about to break out, fail breakout. Then that means it's probably going to go to 6. And I'll pay attention there. 6 will be an important area here. You kind of see this. Yeah, you see this area here where it had a lot of fights. It had a fight, failed breakout, collapsed. You see this? This is like a failed breakout. You see this? This is kind of like you move up and then you immediately return all your gains. And then the next several weeks, you just drop. So you see this, you go up, you pull over the creek, and then you give it all back. Uh-oh. Yeah, you're going back down. Most likely you're going back down in the next several weeks. So then if you know that, then you can, set some alerts. Say like, hey, if it goes to $5, $6, I'll take another look at it. So that's what you should do. You should go over everything, all the tickers you've followed. Even if you're not playing it anymore, you should look at what it's been doing this quarter. So every 3 months you should do this and then say, hey, this could be a good trade later on again, and I'll try again and do it. So even if it didn't work out, just keep it on your list. There's a lot of stocks that have interesting looking structures that I don't have time to talk about. Like this is like another internet AI/crypto. Like look at that, 2 failed attempts at 15. Now it's rolling over. Yeah, maybe IREN is good. So I'm not talking about this one, but I'm just saying like you can go over to there's so many stocks out there, and nobody has time to look at every one, but they're all opportunities, right? And they'll all go up at different times in the quarter. You never know. One day it's like Tesla. The next day it's something else. So if you have a whole bunch of tickers to look at, yeah, you can figure it out. And the best way is to, find the ones you like to look at the prices, then set an alert. So in TradingView, you can do it. Stock charts, you can do that. It'll send you an email. You can send a text message. You'll be like, hey, it hit a price. Pay attention, and then you can just look at it later. So let everything else do the work for you. But the first step is to build the chart. You got to build the chart. You got to look like, hey, there's a chart here. There's certain prices I got to pay attention to, and then I'll look at it again later when it hits certain targets. All right. So another thing to look at is gold. You see this? Oh man, gold miners hit 42, struggled for 2 weeks, and now it's rolling over. See, so we're going back to 37, I guess. So gold, we gotta wait. Yeah, silver, we gotta wait. I think silver is a lot weaker right now. Yeah, silver. Everybody's running out of dollars. Everybody's running to the dollar. And the bonds too. Let's see. Bonds. Yeah, they're going to bonds too. Bonds have done well this week. But we're hitting a resistance now at 92 for the 20, 30-year bonds. So this is the ETF for bonds. Yeah, okay. I'm going to have to watch this carefully next week. Oh, I forgot AOI. AOI reported earnings. Ooh, this is bad. Yeah. So this thing looked tempting if it did well in earnings, but since it did this, oh my God. Oh, this is probably a good short. Martin Scully should be shorting this one then. Because AOI, if it does this can easily go back to $7. This is an easy short. This is an easy stock to short too, because when it rolls over hard. I would just short this sucker. So if anybody wants to short, yeah, go short this one. AOI, short this. Ooh, that's a nasty earnings reaction. Oh man. So let's say next week it comes back to 26, then short there. All right. They'll be like, oh, it's trying to get back up, fails, and then rolls over to 7. Oh, that's good. Yeah. So yeah, you can quote me on that one. See if I'm right. I'm not a shorter though, so I'm not going to short a single stock like that. Like this, I'm only going to do MSTR or something. But if you do a small stock, yeah, you're going to take your chances. Go for it. So let's look back at MSTR. I think it's still trying to get to like 250. All right. Let's see if it get to 280, and then you can short there at 290, 280, and 290 next week. Let's see if it can recover a little bit. Then you can short again. All right. Mobile Eye, MBLY. Oh my God. This thing looks so good because earnings, it went down to 14 and it came right back to 16. Tried to get back up to 18. Came back down, goes back up to 18 again. Comes back down. Now it's 16 again. I don't know what to say about this one. It looks like it still could try to go back up the way it's setting up, but I think we're going to have a hard time in the next 3-4 weeks. So if it hits 15, okay, put it on your list. All right, MBLY. Put it on your list. See if it can hit 15. Maybe I'll buy there. All right. So a lot of stocks to look at for the next coming months. I don't think you need to wait too long. If the market's going to tank, it'll tank in a month at least. And then you'll see which one we can grab. All right. All right. I think I covered everything I needed to cover. 1 hour. Good. Let's I haven't watched this yet. Let's see what Joe Rabel thinks about the market today. Or, well, I think he posted this, so he already recorded before the PCE got dropped. But let's see what he says.
This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. I'm going to give you a stock market update for Friday morning. Now, Thursday was a rough day in the market. I want to go through details on this and sort of explain what I'm seeing in terms of the strength of the decline and see if it's strong enough to really turn things to the downside, because we've had a few attempts at a decline that have immediately just kind of people buying the dip and immediately turning it back to the upside. Let's see if we've kind of finally turned the corner for this to make a legitimate pullback. Now, before I get into that, if you want to learn more about some of these techniques, I would suggest starting with the book. It's at rabelstockresearch.com/book. Also, if you enjoy this content, please hit the like button and also subscribe. Okay, let's start with the sentiment, which the number of bulls dropped this week. Actually, the bears dropped too, but the bulls dropped more. And so we actually had a decline from 24% to 20, which is the decline from 24% to 20, which is the difference between the bulls minus the bears, right? So we had a drop in the sentiment, which suggests less bullishness. I don't think it was a significant enough change to change anything for me, so I'm looking at it as a neutral still. From an overbought oversold standpoint, last week we got pretty close to the overbought territory, but didn't quite reach. And now we're actually approaching the oversold with just one big ugly bar here. So we'll have to see how things play out Friday. But you know, we're working our way down to oversold here pretty quick. Now, you know, based on the dynamics of the price action, that doesn't necessarily mean it's a buy. We'll go into that in a sec. All right, so volatility. The weekly is still high. I'm gonna talk about that next, and then daily actually is showing an increase as well. I'll get into that as we move on. But the only change in the trend and the momentum this week is the daily is moved to neutral, and you know, we had a pretty good size drop. So we'll go into that. We've had some problems in the momentum on both the weekly and the daily, and they might be coming home to roost here finally. With this current price action. All right, I want to close this down so we can take a hard look at what took place. You can see that we're a weekly chart. We opened up near the high for the week, you know, tried to push a little bit off the open on Monday, and then have pretty much been down, okay? Now, we had a couple hesitation days, you can see on the daily, but you start down, you have follow through, and then you kind of pause right around the 18-week. That's the blue line here, right? And now we've kind of decisively gotten below it. We just got to see what takes place on Friday, but this is pretty nasty price action. Obviously, because it's been so nasty, we are severely oversold right now. The question becomes, you know, do we get some kind of a snapback move? And I would say we would probably need to come back pretty substantially above this last day to make me feel a lot better about what's going on. If we just retrace, you know, say half, say like 591 or lower on Friday, we don't really make any significant headway above the midpoint of this red bar on Friday. I would say that's kind of a negative. All right, let's look at this. Volatility starting to climb just based on we have one big bar here and one big bar here. It doesn't take very long. As I've said, the volatility on the daily is a lot quicker in its changes than what takes place on the weekly. The weekly is a little bit more methodical. This is more like a motorboat where you can turn really quickly, right? And this is more like a big yacht or something. It just takes a long time to turn both up and down, all right? So you're gonna wanna realize that, because these can give you the sense that things are switching and all of a sudden this is looking better. But that's why I will always refer to the weekly chart, even if I want to do short-term trading, because I want to know what the kind of the implications are of the bigger picture. All right, let's go ahead and switch this over now. I want to do something a little bit different. So I want to start out, actually just take a quick look at NVIDIA. I have mentioned this a few times over the course of the last few months as I do the market review. I'm a believer that NVIDIA is the leader. Now, NVIDIA started up and led this move to the upside, and it has been an incredible stock. But if we look at what's taken place, there's a couple of things that are kind of meaningful to me. We had a big run up. It's hard to see with this chart, but big run up here. This is the monthly. So we've had three big runs. 1, 2, 3, right? Here, look at this ADX reading, ADX reading, and a third ADX reading. Now, I'm not an Elliott wave guy, but, you know, we've had, you know, wave 1, wave 3, you know, so if it's 1 and then 2 down, 3 up, 4 down, 5, I mean, it is a pretty good chance we've seen 5 waves on the monthly chart. And maybe this is finally, and you can see look at the difference in the price action. I just got to show you this. There's hardly a tail in this for years. And now look at this. You know, again, you don't have to be a genius technician to recognize that there's a likelihood, this increased volatility is the likelihood there's distribution taking place. So that's kind of where I stand on this. And the other thing that I'm watching is we have this uptrend. Now, I like to use the zigzag to keep an eye on this. We broke the uptrend line here, found support, rallied up, and have tested the high, and now we're coming back down. Now, this hasn't officially turned down yet because it would turn red if it zigged to the downside, but it's got to be pretty close. If we do that, then we've formed a 2. Now, I mean, if you look at it from a pivot standpoint, there's a very high probability we're going to form a pivot high here by the end of the week. So if you look at it from that standpoint, we've broken the trend line, we've rallied up and tested the high, and we have formed a 2. Now the question becomes, do we take out this prior low? And that puts it on a hunt for this support down in the mid-90s. Now, why am I talking about this, and why do I think this is so important? Again, because it's been the leader. If you go and you look at Microsoft, you go look at stocks like Amazon and Google, you've seen these Mag 7 that have been going up and away, starting to give up a little bit here. And I think, it's something you have to pay attention to, just based on the numbers. If you're going to look at the S&P, you have to look at the stocks that represent 30% of the S&P, right? The top 5, 6, 7 stocks represent about 30% of the S&P. So you have to know what they're doing. So I would suggest spending a little time after we just went through on NVIDIA, go back, look at Microsoft, see if you see what I'm seeing, which I think is some deterioration and a key level at 400 for Microsoft, right? And then go and look at some of the other stocks in the Mag 7 and see if they look more like they have the chance of pulling back. Because if they do, this is going down. I mean, there's too many small stocks in the index that are not going to they're not going to be able to make up the difference. If you have those 4 or 5 stocks out of the 7 that look like they want to go down, this index is going to go down. It's just pure math at that point. Now, let's look at this weekly. Actually, what I wanted to do is just spend 1 minute and look at the quarterly chart. I spend a lot of time talking about the yearly, but look at what the quarterly has done. You made this move up into the top in 21, and then you pull back and you get stretched away from the 18 on the quarterly line. You see how beautiful this chart is at representing when there's a trend, a big trend underneath. You see how this is, if you come down towards this 18 when they're both rising, it's really a great area to be a buyer from a long-term standpoint. But look at where we are right now. So we've made a big run, but not only that, notice what happened here. We formed our first tail in this run. Okay, so the last bad bar we had was way back here before it really broke out. Then we had good bar, tail to the bottom, and now we finally looks like we're reaching a point. Now there's another month left in this quarter, so it's not necessarily forming another tail yet. We don't know that. It could get actually a lot worse for all I know, but the point I'm making is that we've started to see some signs of some distribution. And you can look back, you can see these when they show up after a little bit of a run. They're sort of the precursor. It doesn't mean they're an exact timing tool. There's probably an increasing likelihood they want to work back. You get a tail here and then you kind of work back. Right, so we just want to be aware of that when we see it. If we get another, over the course of the next month, obviously we'll revisit this chart when we end the quarter and see what it looks like. But the question is this a sign that we're starting to get tired and that we're getting ready to turn down? All right, now, so that gives us a similar feel for what's taking place on the monthly chart. But the weekly, I think, continues to be the key. You pull back to the 18-week here and turn back to the upside. You turn back and actually look like you're breaking it, but really in reality, you gap down and then spent the week going up and never turned this line down. Came down and found support at it, came down and found support at it again. Now, the question is this going to finish poorly for the week, right? So Friday matters. And then is this line going to start rolling over? Because it hasn't done that in quite some time, right? Really, since this whole move started in late 23, we haven't had this roll over. If that happens, we really have to be prepared for a drop down to, I would say at a minimum like 55.50 area, something like that, I think is a pretty high probability. Based on way things are set up. Now it's possible we could work our way all the way down to the 18-month, but right now I would be looking more at that interim area between 5,500 and 5,600. If in fact we have a bad Friday, I would say that is an increasing likelihood of taking place. Now I did want to just mention one thing First of all, on the daily chart, look at that. Again, I mentioned this earlier on the other chart. They had to pause and then we had continuation to the downside. This wasn't a complete test of the 18, but it was close enough. Now, the MACD is back below the signal line, below its zero line, but the signal line is above. So I'm not sure that I would consider this negative, all right? But I do think this is kind of a big deal where we never got green DI going to the upside when this was trying to break out. But look at what red is doing, and it's causing this to move to the upside. So we want to watch this and see how it plays out. It still kind of qualifies as a big range still, right? But the lower end of the range is down here, okay? Now, if we finish off poorly or if we get some kind of a hitch and then we follow through, then we have a lot more confirmation that we've got problems. All right. Now, if you look at the NVIDIA chart where it had the 1 and the 2 forming, this has not even done that. I mean, if I draw a trend line in, right, I'll just put that up there just so you can see. It's really not, I mean, we haven't even broken the trend line yet. See that? See how much earlier this one is relative to NVIDIA, but it also has more downside before we reach any kind of bigger support, unlike NVIDIA, which again is probably somewhere around 95 or something like that. So we've got some risk right now. We've got some pretty good velocity, pretty good strength in the momentum and the volume pattern and everything. It's all suggesting there's some pretty good selling taking place. But let's see how Friday plays out, see if there's follow through, see if we break this trend line, and also, you know, does NVIDIA finish off its the 1 and the 2 with a 3? If we take out that low, I think we're going to see this follow suit and kind of play follow the leader. All right. Let me know if you have any questions. Thanks.
All right. I think you got the idea for next week. Okay. Everything matters now. Now that we're at the bottom of that range, everything matters. All the news matters. If we were like goofing off in the middle, well, it's got to be really bad news for something to happen. But I think we've completed all that. NVIDIA did its work, and then we got the tariffs, right? That will come into place on Tuesday, March 4th. So we got the tariffs on Canada and Mexico, and then we got some added tariff on China, right? That will come into effect and all that. And yeah, watch the Chinese stocks too, see if where they go. I've been selling on the way up, right? A lot of those Chinese stocks. So they could be good buys later on. Again, I'll have to see. But I mean, technically, they probably could have made it all the way into mid-March, but maybe not. If the U.S. stocks are going down, yeah. Yeah, okay. BYDDY is down 6%, Xiaomi's down 6.7%. And we got some economic numbers from China coming out over the weekend too. So I don't know how that's going to play out. So maybe that's it. Maybe that's all we're going to get for China for now. And yeah, we got to come back in May, along with everybody else. So a lot of things now are in limbo. Okay, so let me get rid of some stuff here. And I'll show you before we leave. Let's see. Blah, blah, blah. All right. Put this up. Okay. Put the banner up. So let's look at gold again. Let's hopefully want this thing. Okay, gold. Okay, hit a C5. Yeah, C5. We got 13 and a 9. And this is daily, okay? So I'm going to watch that gold. Gold's going to be important. I think maybe it found a support here, but yeah. Let's see if it holds. And then the weekly on the DeMark. Yeah, so this thing will be important top, I think. It's because the weekly I see a 13 count too with a 9. And you got C3 on the weekly. Ugh. Yeah. I mean, if it doesn't hold here at 261. So I'm using the ETF, GLD ETF, so don't extrapolate this to ounces of gold right now. But it could go down here, huh? Yeah, if you're looking to buy gold, you probably have to wait a while then. I think that's it. I think we've hit the top. We definitely hit the top for gold right now. So I wouldn't be in a rush to buy it back. So let's see what the dollar is. So this is the dollar index. I think this still will go. Gotta wait for the Bank of Japan on the 10th of March. Oh man. Well, maybe the unemployment reports will be the one that'll kill it. Let's see what like the bonds are doing. Bonds. Yeah, it could still go up, huh? Maybe bonds will go up to 96 for the TLT. I don't know. Shoot. Let's see what the daily has. Yeah, this is what I thought it would stop at. I don't know what that means though. Usually bonds going up is okay for the small caps, but the small caps aren't following this guy up. So everybody's running to dollars and bonds. That's not a good sign. And they're running away from gold too. Okay. Oh man. Yeah, we'll hit the bottom of the range here. Yeah, nothing new here. Nothing insightful on this one. See what the NASDAQ brings. Okay, we're down here. Yeah, maybe we can get up to 526 on the NASDAQ. Wouldn't hold my breath. But for now, we're holding. That's all I can say. For now, we're holding. Ugh, so 78 minutes. I guess that's a buy. Yeah, okay. Man, it's too ugly. Way too ugly. S&P. Yeah, it looks like we'll have to see. How Monday goes. All right, guys. Watch how Mondays goes. Okay? I don't think you can tell on Friday. There's nothing going on right now. I see Bitcoin trying to get back up. Okay. Everything's pulling back down again. No, this is not confidence building here on a Friday. Definitely not. So you gotta wait. Yeah, QQQ's falling down again. So no change. Yeah, no change. Sorry. I don't think the rest of the afternoon is going to be an up day. So nope. I'm not getting a good move. Now, if it collapses into the close, all right? Expect a really bad Monday. All right? Get your cash ready. Get your cash up, and then we'll see what happens on a Monday. All right? But I think we're preparing for the end here. The next 2 weeks, see ya. Bye-bye. And that's why I said, like, if you're an investor, hey, what's up, Garion? If you're an investor, you're gonna hate this first quarter. Yeah, so a lot of you guys who are still trying to long everything, good luck. Good luck. This is a trader's market right now. This is total trader's market. See you in the March and April then, when I'll grab everything. So yeah, cash only, guys. Keep your cash up. If you're willing to short, prepare to short. I think I listed some ETFs for you guys who don't use. Let's see, right here. Go use this stuff. So if you want to short small caps, use TZA, 3x leverage. You want to short the semiconductors, SOXS, 3x leverage. Short the Dow Jones Internet Index, WEBS. So that'll be good when Google and Microsoft and Amazon and all those guys start falling and collapsing. Meta. And then if you just want to short the overall NASDAQ 100, SQQQ. There you go. So prepare for the end. Not right now though, but yeah, soon. So yeah, on Monday, 10 a.m. we will have ISM manufacturing. I guess before I didn't think it was going to be a big deal, but considering how the market is right now, the way it's moving right now, yeah, it's going to be a big deal. Every little piece of information will be important. Nvidia did not save anybody. So yeah, well, it didn't really hurt anybody either, I suppose. It was just more the tariffs, but hey, it wasn't good enough to keep like the lifeboats alive, right? I'll see ya.
Feel like I should go. 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 Feel like I should. Feel like I should. Feel like I should. Feel like I should. Feel like I should go.